If anybody's an athlete, do you know what zone 1 versus zone 2 is? Okay, what we'll do is you're going to have to imagine this throughout this whole presentation. This side of the presentation is going to be the early stage. That side of the presentation is going to be the late stage. And typically, when you run a marathon, you run zone 1 to zone 2. What does that mean? You start slow and you end powerfully. That's the marathon. That's the way we learn it. In the startup world, in the fintech world, it's the opposite. And that's what we're going to discuss now. So typically, this side of the stage, what do investors look for? That side of the stage, what do they look for? So I'm going to start with the typical thing on across the board. There's one, the founders are looking for money. That's the constant across. The dollar sign is across. What happens here? What are the investors looking for? Simply people and product, and we'll get into that. On this side, we're getting into systems, balance sheet, governance, who's the board, who's the C-suite. So now, what does that mean for each of you who's trying to raise money, each of you who's trying to invest money? Let's take this side of the world. I don't know if you guys heard that Revolut guy in the plenary. We all know Revolut disrupted banking several years ago, but they did it really well. They focused on the product. They focused on the product like a nerd. So in zone 1, you're typically, let's say you're running the marathon, in zone 1, you're burning fat and you're keeping it at constant. You're not trying to kill yourself. But when you're a founder, you're in zone 2. It means you're killing yourself. It's 24/7. It cannot work in a corporate. We said, I think Kartik said, Mashrek, etc., that in corporates, you can build startups. Good luck. Here's what happens when you're a startup. The founder is working 24/7. The founder is falling down, getting back up, getting some support, but he's not getting slapped. In a corporate, if you fail once, twice, thrice, you get slapped. You'll get slapped many, many times. And when you get slapped many times, you give up. You're in zone 2, you're in pain territory. When you're in pain territory, you've got to go all the way through with all the support systems you can. The other thing is the marginal improvements you make here have a big impact. Again, like an athlete, the difference between number 1 and number 2 is 0.1 of a second, or is a 0.1 of a kilogram, or it's a 0.1 of a speed. That's what they're working on here. Over here, guess what is the first question they ask you? Is it going to move the needle? 0.1 second, 0.1, nothing is going to move the needle here. So here, it's going to be a lot more about, is this strategic enough? Is this so big that I can't miss out? I don't care what I have to pay. So if a corporate, I'll tell you about me and Ian in a second. Ian bought a significant stake in Karim. This is something we could not miss out on. That's a large investment. It's a large because it's an important company that matters to us. Over here, what matters is the nerd, is the product, is the attention to detail, is the ability to stand up and attack, stand up and attack, and get hurt all the time. Not all of them will make it all the way. So what are we looking for when we invest here? We're looking for people that are going to make it all the way, which means 90% of them won't. It's only the 10% that will. We're looking for the ones that are technically smart enough to survive this, that are streetwise, that are hustlers, because over here you're hustling, you're doing everything. You're the CEO, you're the T-boy, and you're the product person. And the customer is going to call you first. Anything goes wrong, customer calls you first. When you're over here, how many times does your CEO say, listen, I got a customer complaint, fix it? The CEO hates it when a customer complaint comes here. Here, every customer is going to complain to you. So effectively, this is the big difference. Here you need the structure around you. Okay, let's talk about what we do. So EAND, as you know, one of the largest telecom operators in the world. In the region, it's the largest. 200 million customers around the world. So we have a mega flywheel. We have a large corporate balance sheet. We have customers which we can reach out to, that we have daily, monthly, regular relationships with, that we have data on. And we have a very large corporate base of customers, SME and corporate base of customers. So that flywheel is an important flywheel for all fintech startups, not even fintech, but pretty much any startup that requires a touch with the customer, that requires a need for a brand and a need for a balance sheet. So what are we doing? We're supporting these, call it mid-level. So we're investing not at the very end, not at the very beginning, we're investing in the middle. We're investing proven sprinters, proven stage 2, zone 2 founders that have reached the second part of the marathon. They're not yet at the finish. We'll help them take them to the finish. We'll give them the red carpet. We'll give them the gels and the trainers, etc. This is what we're going to do. We do sometimes find the marathon runners at the end, like the Karims. There are not many in the region, but they're coming. Let's explain a bit what happens here. If you're a great company, great fintech, and you want to exit to a corporate or you want to exit to IPO, the first thing you do is say, okay, am I big enough? Is it profitable? Is the business in a state where it's exitable? Let's say you've ticked it. Is that good enough? Because what happens in a market like now, 3-4 years ago, the markets were buoyant. You could sell anything. Now the market says, okay, I'm making this number up for now, for a second. The market is trading at, call it 5 times EBITDA, or maybe 1 times revenue. This is the average market that's trading out there. So they come to you and say, okay, you've just made profits. You're in your $1 million, $10 million profit. I'm going to value you at only 5 times. And you're like, I've worked 7 years of my life so hard to get to this point where I'm at an exit point, but the valuation is so low. What changes the game here? Simply, how can, even if the market is trading at 5x, how can you be at 25x? Straightforward. The company, what will the bankers do? They'll trade off competition to buy into you. Everybody will want you. If you're, let's assume Revolut was a small company, and let's assume the bankers here wanted to buy Revolut. So Fab, Mashrek, and ENBD were bidding for Revolut. And there would be that situation that says, what makes Revolut such an opportunity that we cannot lose out? We cannot miss out on it. Over here, the exit is, I cannot miss out on it. I am so good. The people that are looking at us cannot miss out, because if they miss out, it's going to go to competition, which means you're going to be willing to pay more than the odds. You're going to pay not only more than the odds, you're going to allow a bidding competition to happen at the end. That's what happens here. That's what happens pre-IPO. That's what happens during the beginning. Over here, it's completely different. Over here, as a founder nerd, I'm calling a founder nerd because they're so focused on the product. They're so focused on disrupting the customer proposition. They're so focused on bringing this new S-curve to efficiency. What's the big thing about AI now? It's purely efficiency. Every single one of us should be enhancing our efficiency with AI. What are we looking for? We're looking for tools that allow us to do it, not me having to do the whole coding myself. No, I want those easy to find tools that allow me to do what used to take 10 days, 1 day, or 1 hour, or 1 minute. That's what I'm looking for here. So those founders are building products that are easy UI, UX, easy to build that journey, easy to sell to you. That's what they're building. They need investors who can think like that, who can then support them to this stage. What happens at this stage? At this stage, the product is, call it, proven. Customers like it. Investors are starting to think this is a great company. What do they look at? This is when they look at, number one, unit economics. On a standalone basis, does this make money? Can it make money as it scales up? Number two, the marketing, all of the PPPs, the price, the promotions, the product proposition, is it at a value that is easy to sell? The go-to-market is easy. Is there enough margin that tomorrow I can increase the price and the customer won't leave? Is the price elasticity in your favor? That's the most important thing. If it's in your favor, you know that you've got a sticky customer, you know you've got a sticky product, and you know there's something, your product's worth something. If you're giving it away for free and you can't increase prices, or you fear increasing prices, or you fear charging for it, go back to the starting point. Build a better product. People should pay for your product. And people will pay for that product and be willing to stick with it. The second thing we look at is the entire cohort analysis. At this point, you're starting to collect data on everything that happened from there to here, data on what your customers have seen, data which you're using to enhance your product. This means you're figuring out which segments of your customer base the product is working, how you can enhance your product. If any of you have ever been in young gamers, when you have these games that last 800 hours, these games that last 800 hours plus, when you're in the game, the guys inside, the developers are continuously improving that game over time. They're continuously adding features to that game. That's a continuous evolution. That's what's happening to these founders. They're building this incrementally. They're not what we said over there, moving the needle. They're incrementally building it, but for customers, this is critical. So at this point, the cohorts matter, the analytics matter. Investors are looking for that. Investors are saying, am I betting on a great zone 2 founder who is willing to burn, and in the hustle, along the way, he's built a great product, great customer base. The segments prove that the churn isn't there. The pricing capability is there. But as you move here, one more thing, even more important as this happens, and this happens along all the way. Is this founder able to attract amazing talent around him or her? Amazing talent at the C level, at the lower levels. Is the energy that brought the sprinter here able to bring a whole relay now? It's not one, now you're no longer a single person driving this product. You're multiple people, and multiple people that are engaged in different stakeholders. You've got the regulatory stakeholders, which have a very special way of doing it. You've got the customer types, which have a very special, you might have what used to be, by the way, anybody who ran call centers or managed call centers, you know where that's going. You know where AI is taking that. So what happens to all of your employees as you upgrade them and migrate them? Some of them also have to be downgraded along the way. That's the speed of transition. Are you able to attract the right team around that? Those stakeholders also include your investors. Your investors have to be the right stakeholders. You got a lot of bad investors along the way. And then in this part of the journey is your board. Who are your board? How are they managing you? What's the governance around it? How are they supporting you get to that, I'm an unmatchable business? How are they supporting you there? How are they giving you guidance? And I tell you, typically, that requires 3 types of board members. Somebody wise, old, experienced, because they've seen it before. They have that kind of grandfatherly or grandmotherly approach that allows you to be at peace with each other. You'll always fight, by the way. Along this way, when you're falling down and getting hurt, you're doing that not alone. You're doing that with many people. That creates fights like siblings. Along those fights, the best people that manage those fights are not the mother and father. It's the grandmother and grandfather. So that's what's happening. You need one person of that form. And typically, these people are not even incentivized in the sense of shares. They might be getting paid to do that job. They might have some advisory shares, but they're doing it because they truly believe in this, and they're giving their heart. They're giving their real heart to it. So you feel this is authentic. This is not paid for. This is seriously authentic. That's number one. Number two, you need a technical board member. Technical because Along this journey, the founders have been building what the customer wants, which is a product. The customer wants the product. The customer doesn't want a brand and a name and a cheap price. The customer wants a product that makes their life better. That's technical. A board member who doesn't have that technical expertise, you need at least one board member who's been through the technical journey, who's seen it all. And number 3 is a little bit of a banker, finance, negotiator, who's been through this journey all the way to the exit stage, all the way to see what it takes from a balance sheet perspective, from a governance perspective, from a how to spin it perspective, the strategic perspective, to take it all the way. These 3 profiles are critical. They don't always have to come from your investor base. They don't have to come from the founder base. They can be quite independent. They just have to be the right people. So that's, as investors, we're looking for all of that journey. At this point, when it's either IPOable or exitable, the balance sheet starts to matter. Are you a stretched balance sheet, especially in fintech, which we know the margins are thin, potentially negative. And it's always about when I hit this scale, when I'm 100x, I can make money. Can your balance sheet withstand that? And have you got the necessary back support, insurance behind it? So at this point, that balance sheet is critical. At this point, the financials, by the way, how many stories have you heard where there was some kind of fraud along the way? I don't want to call it fraud, but mistakes in accounting, mistakes in the way certain data items were shown. You want to be clean. You want to be super clean by this point. It's understandable over there because you can't look after everything and sometimes data is not that clean along the way. But when you're here, the governance, the systems, you name it has to have happened. Multiple audits, technical audit, financial audit, legal audit. You shouldn't have anything on the edge because small edges takes your multiple down from 5x to 4x to I can't do the deal X. If you're clean, 5x becomes 10x. And if you're unique, 10x becomes 20x. And if you still have that growth where you're kind of a monopolistic power, 20x becomes 100x. That's the delta here. What are we trying to do with our E&D hat on is support all of those companies along this journey. Support all of those founders along the journey. We can't do it alone. We're doing it with all our friendly stakeholders, the banks, the regulators, the large corporates. We're doing it with our existing customer base. I'll tell you a story about one of our investments, and this is the hacking story that happens here. Some of you might have heard this story. One of our investments, he was 22 years old, the founder. This is about 15 years ago. His dad sold tomatoes and potatoes. And he was selling, he joined the dad's business and said, how can I sell more tomatoes, potatoes? So he hacked the data and said, who buys the most? It was shipping captains. Said, okay, if shipping captains buys the most, let's go sell to every shipping captain. So he got here and he said, I'm going to hack into satellite data to figure out where the ships are. So when they land to the ports, they've received a message and I'll have sent them a list so I can aggregate at different warehouses around the world. I can pretend I'm Stephanie here and Faisal here and so and so, and I'll sell them potatoes, tomatoes. So he became an aggregator. Great. Then he asked the customers, interview, what do you want? What am I not giving you? Why aren't you buying from me? Because yes, grew, but not enough. And in those days, I'm now talking 12, 13 years ago, what do sailors want when they reach a port? And it's not a joke, it's serious. What do sailors reach when they reach a port? What's the first thing they do? They call home. They call home. And they say, hey, I've landed, I'm safe, things are good, how's the family? How do they call home? They need a local SIM. So they go out and buy a local SIM. So this guy found out that other than potatoes, tomatoes, they need a local SIM. So he created what was called SIM Crew, which was basically a global roaming, very expensive, but global roaming. This is still 6-7 years ago, where physical SIMs, where the packaging for the physical SIMs is this big. So now imagine he's aggregating in about I don't know, 100 warehouses around different ports in the world. Each port has to receive, call it 1,000 SIMs. 1,000 SIMs with that kind of package is about the size of this screen. That's like a half container. You're sending a half container around the world with inventory issues, with logistics issues. So, but it was still working. That was generating value. Then Apple came up and disrupted the world and said, you can do an eSIM. Why do you need to send this? You can send a little file. In a little file, you can have as many SIMs as you want, 10,000 SIMs, 100,000 SIMs. So that's how he pushed from a physical SIM to an eSIM. But by that time, he's learned what did the shipping captains want? What did the sailors want? And suddenly over here, he's realizing this is a travel companion. What do travelers want? Then he realizes who is providing it. The telco providers, how do they deliver this to you? And how can I execute this? And how can I do it at a country level which is regulated, which has a different price, which has a different way of reaching it? So that journey from here to here took about 7-8 years, took multiple pivots. But it's one person driving that journey all the way through, learning from their customers. The customers grows, the customer type grows, the customer segments grows, the stakeholders, the guys, the producers of that SIM, which are the telcos, we change along the way. It used to be the physical SIM providers, the Gemaltos. Then it became the telcos. As it moves this way, I'm not going to tell you the rest of the story because that's the future story. But the future story effectively says, if again, back to the Revolut question, when the moderator asked Revolut, which is your fastest growing business? It was not fintech. He said, it's my eSIM business. My eSIM business is growing faster than my fintech business. So if you go back to the super app world, you have to think about what do customers want? By the way, what is the most addictive product in the world today? One product. You give it to your 3-year-old, you give it to your 14-year-old, you try it yourself. You'll get addicted. What is it? I don't mean drugs. No? Yeah, it's an app, but it's even stronger than TikTok right now. It's grown from 0 to $80 billion revenue in about 3 years. No? Okay, the Chinese version was called Pinduoduo, but they created a retail called Temu. Temu is crazy addictive. They figured a way out to make it crazy addictive. They touch you everywhere, anything, etc. So along this way, as you're building a super app, as the founders are building something that touches the customer all the time, that touches the corporate all the time, they're finding a way for that addiction to stick. The sugar. Back to my zone 2. In zone 2, your body is craving stuff. Your customers are craving stuff. Feed it. Learn how to feed it. Learn how to build on what exists. And once that flywheel is cracked, by the time you get here, you're so big, nobody can touch you. You're so big, everybody wants to buy you. And of course, every regulator wants to kill you or hurt you. I mean, we've seen that across multiple fintech, whether we talk crypto, whether we talk whatever, for good and for bad reasons. So along this way, you got to also stay clean. You got to manage the regulator. You got to have clean records. You got to have your KYC, KYB, whatever it may be, in the best way. Try to keep all of this contained with the bad actors that sometimes engage, because competition is sometimes bad. My time's up. Sorry for that. I got carried away.
You want to say some last words?
I encourage each of you to try Zone 2. Zone 1 is doable. Zone 1, 90% of the world can do Zone 1. So if you're in Zone 0, definitely get into Zone 1. So push yourself, push your own limits. Zone 2 is when you really push it. When you're burning, not just fat, you're burning muscle. I encourage you to do it. Try it. You got to see it on the other side. Thank you.